Hey everybody, how is it going? Welcome back to the channel. Well, I was going to say another day, another bloodbath in the market, but no need to say that. And actually, today's price action wasn't too bad. It just seems bad because it came after yesterday's price action. And actually, I thought it was going to be a lot worse today. I had several orders that were pretty low in the market. I thought they were going to get hit. I thought today for sure was going to be an acceleration to the downside, but it did not happen. But anyway, I found some charts on the internet that I wanted to share with you guys. Maybe it'll put this whole pullback into historical perspective. Maybe make us all feel just a little bit better. But the first one that I want to go over is this one. It just says that the correction this year is actually average. And it shows the average return on the S&P 500 each year and the max pullback. Those little orange dots are the max pullback. So actually today, we are sitting on the max pullback area average. So if this ends up being the low in the market and say the market ends up a little bit higher, or it even ends up being positive, I know doesn't seem like a very likely scenario at the moment. This would just be an average pullback that the S&P 500 usually experiences. And actually, if it closes, anywhere near this level, this will actually be the third biggest decline going back 40 plus years. Only the tech wreck of 2003 and then the financial crisis will be worse years as far as a closing year. But there's actually some pretty encouraging information where the market goes from here, or at least potentially anyway. But here's another chart that I found on the internet, and this one says that the S&P 500 is down 13.3% in the first 82 trading days of 2022, which is the third worst start to a year in history. And actually, the worst 2 years before this year was 1932 during the depths of the Great Depression, and 1939 when the economy was still coming out of it. So I would argue that, this is probably the worst year for sure. Certainly if you, think in terms of sports when they say like the modern era, because the market and the economy was much different in the 1930s. But if we look at this part of the column right here, this is how the market performed after day 82. So day 83 to the end of the year in 1932, the market finished up 18%, which is a dynamite return. And in 1939, the market finished up 14.7%. So obviously, we don't know what it's going to be this year. In 1942, the market finished up 27% after day 82. And in 1970, it finished up 12.6%. So I think odds favor that, we could be getting pretty darn close to a bottom. And once the market does bottom, odds are certainly favoring that after that bottom, we could have a very nice rally on our hands. And bringing up the AAII survey again, I know I went over this a couple of days ago, but they actually had a new release for the May 4th reading, and the bullishness jumped up to 26.9%, but take that with a big grain of salt, because you remember May 4th was the day we had that massive reversal after the Fed spoke, and it looked like we were going to rally. So I bet if they would have taken these or showed the results from the next day, the bullishness would have been well under 20%. In my opinion, because it just seems like the market has gotten even worse since the April 27th reading. We can see the neutral reading is actually all the way down to 20%. So this is showing us that people are becoming much more opinionated on the market, and the bearishness reading still stayed above 50%. But I was reading a statistic that says when the bullishness percentage has finished under 20%, which we have the last 3 weeks in a row before this reading on May 4th, the market was higher 100% of the time 6 months later, going back over 30 years. So I think this is another indication that we could be getting close to the bottom, and this is when you might want to be adding stock to your portfolio. I'm certainly adding some stock to my portfolio, but I just think that a lot of these indications are really starting to pile up. This might not be a bad time, to be adding stocks instead of selling your stocks off. All right, well, the first chart I want to get into is the HYG, which is the iShares High Yield Corporate Bond ETF, or Junk Bond ETF, as some people call them. But I was reading a statistic, and I can't remember for the life of me how many years it went back, but it was 100% of the time when high-yield corporate bonds have a negative returning year, stocks were up 100% of the time the following year. And it certainly looks like corporate high-yield bonds are well on their way to having a negative returning year. And actually, let's go to the weekly chart. This ETF actually only goes back to the financial crisis, but we can see every time it had a massive dips, stocks were up the next year. We are well on our way to having another big negative year for the high yield corporate bond ETF. All right, so let's go over these market averages. There really wasn't a whole lot to go over today, but I'm going to do it anyway. QQQs did make a new low on the daily chart, but man, it just kind of reversed and hung right around 311, 312 or so, and then ended up finishing, looked like it was going to sell off into the close, but actually had a nice little bounce right around 330. And finished right around 309. So it was just kind of a head-scratching day. Volume did pick up, and actually in the beginning of the day, I thought that things are really going to accelerate to the downside. Let's go to the minute chart. I don't know if you're watching the market or not, but man, once it opened, selling just poured into the market. I put in a bunch of orders in some of the stocks that I hold, and they were so close to getting hit, and then we had this big reversal right here. I got filled on one order for Palantir, and that was it. So I basically did almost no buying today. The options that I bought yesterday in American Airlines and in the TQQQ, they just ended up expiring worthless. It wasn't even worth it for me to close them out yesterday at the end of the trading day. But it cost me pretty much more in commissions, so I just kind of let them expire, take a mulligan on those ones, because I did not expect the market to just turn around and crash. I don't think anybody did. I follow several people in the market, and after a day like yesterday, where it's a very significant day in the market, I'll also comb YouTube a little bit just to see what everybody else is saying about it, and people were pretty much on that same opinion that I was. They thought the big green day that we had a couple of days ago was going to be the start of a nice rebound, and then yesterday everybody just kind of got caught offside. So, I'm not going to beat myself up about it. It happens, and I didn't bet really big, so live to fight another day, and we'll see where the market goes from here. I would expect some more follow through to the downside next week, but I'm really hoping that we get a big flush in the market. And if we get that, I am certainly going to be doing some heavy buying. But, if that does end up setting up like that, I will certainly let you guys know what I'm doing. But let's take a look at the Spider. Spider, same thing, held the low from a few days ago, and just kind of made a little bit of a doji candle, kind of a wide doji candle, but it's structured like a doji nonetheless, which just means an indecision day. But let's take a look at the diamonds. You can see the diamonds had a nice little turnaround, also held the low from a few days ago. So it's really tough to get an opinion on what is going on in the market right now. It's really tough, to know which way to jump on, and that's why there's so much churn. Everybody keeps jumping from one foot to the other. So in a situation like this, you can either, try to grind it out, or you can sit on the sidelines and wait for some clear direction. And that's kind of what I'm doing. I'm just trying to add to some of my long-term holdings if the prices come down. Now let's take a look at oil real quick. Oil is still strong and is not coming back at all. So if you're invested in oil, you probably want to sit tight, because it looks like we're probably going to end up moving higher on oil. I was hoping for more of a pullback so I could not only add to my current positions in energy, but also find at least one more. I'd love to have at least one more in the portfolio, but I'm going to try to be patient and wait for a decent sized correction and, see if I can get in on another good oil stock. Let's take a look at gold. Gold continues to be weak, but probably a lot of that is contributed to the dollar. But, I think that gold will end up probably before too long taking out this high that it made back in early March. So still looking to get in on some precious metals too. All right, well, before I close out the video, I just want to give an update on some of my positions, and spoiler alert, they all sucked. It was just a crappy week in the market, but hey, they all can't be winners. Live to fight another day. The first one I want to go over is GPRO. I actually bought some call options on this one a couple of weeks ago. I had an order to sell some. If it would have made it just a little bit higher on this day right here on the 4th, I thought for sure it was going to hit that 200 period simple moving average. My calls were sitting on the ask for a little bit, but it just didn't make it high enough to sell off or to execute that order. I would have sold half of them at a pretty decent profit, but you can see we had the big sell-off the next day, and then of course GPRO came out with their earnings. And I'm guessing the market didn't like it. I didn't think they were all that terrible. I thought the margins were okay, but it was the guidance that the market didn't like. All in all, I still think that GPRO is a growth turnaround story. I think it's just caught up in a nasty market right now. So I am certainly still interested in this stock, but needless to say, I'm taking a bath on these options right now, but I didn't buy a ton of them, so not that big of a deal. I did buy those American airline calls, and they did not work out because the market fell apart, so those were a total loss, and I did end up buying those TQQQ options yesterday, and obviously we did not have an update today, so those ended up being a total loss as well. I didn't take very big positions in any of these, so, not that big of a deal to the portfolio, more of a big deal to my ego. Nobody likes losing money, but hey, it was just one of those weeks in the market. I expect that just about everybody out there took it on the chin this week unless they got really lucky, but things will get better. I guarantee it, and, I plan on having a better week next week, but I'm going to end the video right there. If you guys see anything interesting in the market, I could take all the help you guys can give me, because obviously this is a crappy week, but please leave it down there for me in the comment section if you see any decent trades setting up in the market. Have a great weekend. Thank you so much for watching my video all the way to the end. And until next time, take care, everybody.